We have some interesting movers here this morning, and we start with Lululemon. The company reported earnings and sales that beat analyst estimates. You'll note that the shares are trading lower by a little less than 1%. They had been falling by more. What's going on here? It has to do with Mirror. That's the connected fitness app and device that the company bought. It hasn't really been living up to its expectations, Brian Chung. And basically, the company cut its forecast in part because of what's going on with Mirror. Analysts still pretty positive on the company and saying that overall it's doing well, but that Mirror is definitely a drag on the company here. But it's interesting the sort of the share reaction here in terms of initially when the numbers came out last night, the stock went up, then it came down on the Mirror situation, and now they're pairing those declines.
Yeah, well, the guidance was lowered from $130 million for revenue guidance for the year. They lowered that to $125 million. And it's interesting because on the earnings call, management was saying that it's really just because of this overall trend of 2021 being a challenging year for digital fitness. Not a surprise because the reopening of the economy started to disincentivize people from creating or investing what is kind of a pretty penny for these in-home fitness systems and instead just go and sign up for the gym again. So this is something that we haven't seen as necessarily specific to Mirror, which, as the name implies, for those that are not aware of this product, it's just a mirror that you kind of install into your wall, and then it also serves as kind of a video screen so that you can mirror the movements of your trainer doing certain exercises or HIIT workouts and what have you. But look at Peloton, right? Same story going on for 2021, where obviously they've had to lower their bike prices to try to get ahead of lower demand as people try to get back out into the world and do regular fitness outside or at the gym. So again, this is going to be a big story, I think, for a company that's still trying to figure out exactly how does Mirror fit into what is still primarily an athleisure kind of clothing brand. And they did want to point out, the management at least, that it's only 3% of their overall revenue this year is the Mirror brand. So I think that's going to be very much in focus. But again, we'll see whether or not this is a changing story. Maybe it's possible that people do end up coming around to the Mirror brand, especially as marketing and kind of advertising get pushed out there by Lululemon. But again, not great for the stock, at least so far.
Yeah, and it's not just advertising and marketing, online or in the usual channels. It's also in the stores. And Lululemon stores actually have some traffic, right? Just anecdotally, if I go into Lululemon, it's not one of the emptier stores in a mall, for example. And they have mirror displays at some of their Lululemon stores, but that doesn't seem to be moving the needle. Again, though, it doesn't seem like there's a lot of concern among the sell-side community about this. Morgan Stanley, for example, said that the cut to the Mirror guidance basically says they say it's not key to the story of Lululemon overall.
Yeah,
so we'll see what happens here. Yeah.
No, I was going to say just kind of one other thing, too, is, we've been talking about Mirror, but the other 97% of the revenue,
Yes,
at least right now, is still coming from their stores. But I think even on that front, there's a little bit of concern as well when you talk about Megan Frank, the CFO, telling investors yesterday that there was an interesting amount of pull forward that they had for their quarter. Again, when you report this late into the earnings cycle, your actual reporting cycles are a little bit off. So this is for the quarter ended October 31st. So this is actually going to be a little bit more reflective of inching closer to the holiday shopping season than, say, other companies that file for a quarter ended September 30th. And they were saying that they've noticed a lot of people doing their holiday shopping to get ahead of the supply chain issues in that quarter, which means that maybe that takes some air out of what is historically their hot season, which is going to be the next quarter, covering the next 3 months after October 30th. So that's going to be a very interesting thread, not just for Lululemon, but for other companies reporting as well, whether or not it's actually going to impact their holiday season earnings because there was that pull forward of demand.
All right, look at that. There's Brian Sozzi. Hopefully we've got his tech issues worked out. Let's talk about Costco, Saz, because I know that you're excited on that one. Comps at Costco, up 9.9% ex-fuel and currencies. I mean, that is a pretty monster number.
Yeah, well, you're not getting me on here to talk about Costco without a quick comment on Lululemon. I mean, Calvin McDonald, the CEO, he should be absolutely ashamed of himself, spending $500 million at the peak of the boom in the at-home equipment market last year to buy Mirror. I mean, a disastrous acquisition. Essentially, Calvin McDonald just lit the whole thing, shareholder money in flames. I mean, just absolutely ridiculous here of an acquisition in a very competitive market. Now onto Costco. Membership fee income up 10% year over year, 30 basis points improvements in certain key margin areas for Costco. And I'm locked and loaded on their cash position, $12.7 billion in cash. And I'm starting to see some folks on the street chatter again about another special dividend for the likes of Costco. They have to find some way to spend this cash. And I think another special dividend is probably coming to Costco within the next 12 to 18 months. Also note this too, Costco CFO Richard Galante, who's been the CFO for as long as I've been covering Costco, which is a very long time, noting on the earnings call last night, they have got around the cream cheese shortage. Of course, the Wall Street Journal wrote extensively about the cream cheese shortage over the weekend. Costco's CFO, how'd they get that done? They just worked harder. My hat's off to you, Costco and CFO Richard Galante. Get us that cream cheese. I need it on my everything bagel.
I've had no problems finding cream cheese. I don't really know what that cream cheese shortage
By the way, I just want to
about.
point out CPI says that there was no change in cheese and related products in November. I don't know if that parses out cream cheese, but I'm just saying.
It does seem to be a related product, doesn't it? But I don't know.
Cheese, I don't know.
Speaking of CPI, we are looking at a higher open here this morning. Dow, S&P, and NASDAQ futures are all pointing in that direction as we wait for the regular cash open here this morning. There you hear the opening bell. Altus Power making its debut this morning on this CPI morning. And the CPI read has really caused sort of an interesting reaction in the market here. It did come in line with estimates, so perhaps that was a relief to the market. We've got the next Fed meeting coming on February 15th. We're going to talk much more about the numbers in just a moment. But as we look at the opening prices here on this Friday morning, we see the follow through and the increase in stocks here. And you're also looking at the effect of some of these individual movers that we've been talking about, as well as some big tech movers that we're going to talk about in just a moment. That certainly is helping the NASDAQ. I've also been watching yields, of course, this morning in the wake of the CPI print. And the movement in yields has been sort of interesting here because you have that print and we've got yields off a basis point at 1.48%. Now, with inflation at 6.8% and the Fed expected to raise rates 2 to 3 times next year, yields going down or little changed is not necessarily what one would have expected. But really, I don't know. Treasuries are hard to parse these days. Brian Chung, I don't know. I mean, I know we're going to talk more about this in just a few, but I don't know.
Well, the volatility in the broad bond market has been a story for almost the entirety of 2021. And I've been telling people this kind of in the same vein as when you take a look at the S&P 500 or the Dow. It's really kind of a fool's errand to try to back into a single narrative for why any movement is happening on any day. And that's not specific just to the COVID era, right? That's just something that kind of underpins all of financial analysis. But when it comes to the bond market, what has been noticeable is not necessarily the directional movement, but just the day-to-day swings, seeing days where you'll have 10 or 15, sometimes 20 basis point moves in the longer end of the curve. That's very unusual for what's supposed to be one of the most liquid markets out there. So I think this just kind of underpins two things. First of all, one, there's a lot of rates traders that are very uncertain about what's going on in the medium-term future for the global economy, because the U.S. kind of Treasury does serve a bit as a proxy for overall economic growth in the world. And then secondly, it's also kind of a little bit of plumbing as well. We remember what happened in September 2019 and March 2020. Things happening in the Treasury market have been a little bit spooky just because of the ways by which liquidity is available during certain types of stress. A lot of questions about whether or not the Treasury and regulators can kind of help grease the wheels of the Treasury market. That's going to remain an open question in the years to come as well.
Yeah, I think I'll just quickly add, I think the trade of the morning really is tech here off of these relatively inline inflation readings. But Julie, I mean, you see that beef price reading. Beef price is up 20.9% in the CPI. To me, that's inflationary and it causes for concern. Might have to switch to fish or chicken.
Well, of course it's inflationary. There's no debate about whether it's inflationary. It's inflation. It's up.
Here we go.
But the question, no. But the question is, what are people going to do about it, right? And from what we have been hearing, people have not yet been trading down to those other items. Might a price change like this trigger that? Maybe, but like then what? You know, I get, like, obviously we're seeing inflation. The question is, okay, we have inflation. Now what? right?
Mhm.
The Fed is going to presumably move next year, but is the Fed going to even make a difference on this, or are we going to have to see supply chain stuff also change? I don't know.
Well, what is next, or what could be next, if people just stop going out as much as they were, and that has an economic effect. You know, we're not seeing it thus far. We didn't see it in the third quarter earnings, but you know what? Maybe it shows up in these fourth quarter earnings. Just looking ahead,
Maybe.
Julie. Just looking ahead. Just looking ahead.
Maybe. I have no idea what's going to happen. And neither really does anyone. But
I do.
all right, we are going to talk about Chewy real quick here. We're going to get to tech earnings in just a minute because we are definitely seeing a lift to the NASDAQ as a result of some of those tech earnings. But there's Chewy. You see they're basically in line with estimates in terms of its numbers here. But the stock has been trading lower after a fourth quarter forecast that was below estimates. You see there, the stock is down by about 7%, excuse me. For next year, the company is looking for net sales of up to $8.94 billion. That is short of estimates. So the upper end of its range is short of the consensus estimate here. And I don't know what's happening with the pet industry, if you will, or if it's just a Chewy specific situation. Maybe people are going in person to Petco once again. I don't know what's going on here. And I don't know. What do you think? Thoughts?
Yeah, well, here's the real-time analysis on why the stock is going down. One, active customers, 20.4 million. Consensus was about 20.6 million, miss on there. Also, I think their fourth quarter guidance was light, just like many other retailers and companies in general. They're seeing their costs essentially go through the roof: transportation, logistics, warehousing, you name it. And that is reflected in Chewy's guidance. But I will say this, it's good to see them getting into the pet insurance market. That product for Chewy looks like it will launch in the spring of next year. Again, it gives them another growth driver. But at least for now, you're seeing earnings estimates for Chewy pretty much come down across the board this morning for the balance of this year and next year. And you're seeing the stock re-rate as a result.
Well, actually, I think the inflation story is big for Chewy as well. This is as simple as kind of a top line, bottom line story when you consider that they had $2.2 billion in top line revenue for the quarter. That's almost 3% up quarter over quarter, but their net loss widened. So it almost doubled from the second quarter to about $32 million of loss in that quarter. And they said that's because of elevated inbound freight costs, product cost inflation, a big story for any online retailer that has to deal with not just the raw materials costs we have to remember, but also the labor costs that are also factored into rising delivery costs as well. So all across the board, you can see that margin story has really been challenging for Chewy and other online retailers as well, which I think is a reason why you're taking a look at the stock falling. But again, as you mentioned, Brian, there are some more structural longer term stories for Chewy, like pet insurance. We'll see if that lifts them up in the medium term.